Hey, what's up, YouTube? This your boy Rubber Band Trades. I'm back again with another trade recap for today, March 18th, 2026, and it's FOMC day. So, if you don't know what FOMC day is, FOMC is the federal rate change meeting that happens every month. This is where the Fed chairman Jerome Powell he gives his statements regarding the economy, and he also gives a statement regarding interest rates. So if he's going to change interest rates, whether that's increasing them, decreasing them, or even leaving them unchanged, that's the information we find out later on today at 2 p.m. So by the time you see in this video, I'm pretty sure that Fed rate announcement has already been released. So on Fed rate day, you usually can get a solid trade off in the morning. And if you look at the market, you see that we have been trending lower ever since about 6 a.m. this morning. So I knew if I wanted to take a trade today, the most probable trade scenario I could take would have been to the downside, right? So when the stock, well, sorry, when the market opened this morning, we got a little bit of choppy price action, and that was just a move back into a 15-minute fair value gap. And then once we started getting that momentum lower, and we finally got a 1 minute market structure shift lower, and a 1 minute FVG, that's when I entered the trade. So as you can see here, I entered 5 contracts at the 1 minute FVG and market structure shift. As you can see there, I'm also drawing out my standard deviation tool. So remember, this standard deviation tool gives me potential points to take profit, whether that is first TP, second TP, or third TP, and it also gives me potential reversal zones. So I knew I wanted to target the pre-market lows right there at 24,865, and I knew if we got to the red shaded area, I knew I wanted to take a contract off there as well, because that's usually where you see a bounce or you could see a reversal when you draw out the standard deviation tool. So I entered 5 contracts on my two Apex evals, and we just wanted to see if this trade was gonna go. So right when I entered this trade, it didn't necessarily just start going right off the back. We did get a little bit of consolidation around my entry. However, again, we are looking for the most probable trade in any trade scenario. We're thinking, okay, based on previous price action, where do I think price, or where can I see price going next, right? And given that we were so heavy through the morning, I knew that we could also remain heavy through this New York AM session. So as you can see there, I placed 3 buy limits at the pre-market lows. So this is how we lock in profits when we're in a trade, right? So if I'm 5 contracts in this trade, I elect to take off 3 contracts at the New York pre-market lows. Okay, that's how we lock in gains while we're taking trades, right? Because we don't want to, get into a trade, be up a certain amount, and then let it come back on us, right? So this is how we lock in those gains. And as you can see right here, I'm showing how we were up at like 6 a.m. this morning. Price was up there, and it came down. So that's why we were expecting this downturn right here. So you can see right here, those my 3 contracts came off at the pre-market lows, and this is where I'm trying to put my 1 contract to come off at that red shaded area. That is also a zone where I can expect a reversal. So as you can see here, I'm up about 320 points on this trade, right? And I got my last contract in profit. So this is technically a risk-free trade at this time. We made the bulk of our money on that initial push down, and now all we do is just relax and see if price wants to go hit these final targets I have down here at the previous day low, right? So when we talk about FOMC day, one thing I've learned about FOMC day is so usually in the morning time of FOMC day, you can get decent price action, right? The more you learn to trade, or the more you get on here and start trading, You're gonna hear people say they don't trade FOMC day because there's a lot of volatility, and that's true. Once Jerome Powell, the Fed chairman, gets on and starts speaking, the market will literally go any other way. Like, so I fully expect come 2 p.m. The market will look like it's on steroids. It's gonna be going everywhere. That's actually where I stay out of the market. I don't want to be trading during that time. I want to be more of an observer during that time, just seeing where the market wants to take us, because this is going to give us a great indication on what the market will be doing for at least the next month up until the next Fed meeting, right? All right, so again, man, when we in this trade, we're pretty much just letting it play out. As you can see there, I got my stop in profit. At this point, we're pretty much just sitting here waiting to see what price wants to do. And it almost came to my stop loss there, but then it ended up rejected. So you can see these 1 minute gaps, right? These are again attracting price. These gaps attract price, and then what does it do? It repels price, right? So you can always learn, or you can always know, like, okay, if price was to return on me, or go in the opposite direction of my trade, you can be paying attention to where these gaps are to see where price may likely go to before either continuing or reversing altogether. And that'll and that are those are FVGs, right? I don't know why I was struggling to say that just then, but those are FVGs, so fair value gaps, and there are gaps in price. So what I'm doing here is I'm paying attention to where price is trying to reject to. So again, I am still aiming for lower on this trade, right? So if price wanted to reject from this 1 minute FVG, I have confidence that it could possibly continue to go lower just based on previous price action. Now right here, I'm looking at this 5 minute candle. This is a 5 minute reversal candle. So when the candle has a long wick with a small green body at the bottom, that's indicating to me that we can get a potential reversal from this level, right? And that's kind of what you're seeing right here. You're seeing the buyers step in once they see a little bit of indecision, even on a 5 minute time frame. Buyers are going to start trying to step in to push price higher, right? And that's what I'm marking out right here. So you see my cursor is just kind of waving around all these levels just to show you what's going on. All right, so right after that 5 minute reversal candle, right, we get another 5 minute doji. So again, this is showing indecision right now in the market. So buyers and sellers are competing for price at this level. Being that they're competing for price, that's why we get these indecision candles, and they're marked by long wicks with small bodies. They're called dojis, or indecision candles, right? So again, we're at the bottom of a recent downtrend, getting indecision candles. This is where I'm looking at the chart. I'm saying, okay, I know we can come back to this 5 minute gap, because again, price is going to be attracted to these gaps. So I'm thinking, all right, price is going to come back to the 5 minute gap, and that's where we're either going to get a push down for the continuation move, or we're going to get a full reversal altogether. All right, and at this point again, we're just chilling. We're just chilling in this trade, and once your trade has typically ran its course, and you've already locked in profits on the day, you're pretty much just becoming an observer, and that's when your trade management skills kick in. So as you can see, that next 5 minute candle that closed red, it did not close below the previous green candle. So that candle was giving me more indication that we're going to get a reversal here soon. So this is how you read price action in real time, guys. This is how you recognize what's going on in real time so you can make sound decisions when it comes to your trading. And again, this is just a risk-free trade. So we're chilling. We're just observing price. I'm logging in my journal at this time, pretty much just logging everything that I've done so far, logging, everything I'm seeing as far as, what initially initiated this downward move. Again, that was the 15-minute ORG rejection after a strong hourly push down. So if you look at the bottom right side of my screen, this is the hourly time frame. So you see this long hourly red candle. That's the candle that we were in on. So these are the type of candles you want to be trading when you hit the charts. You want to get these expansion candles either to the upside or the downside. But when you catch these longest expansion candles on the higher time frames, your trade is more likely to go into your favor. So you want to always be paying attention to the higher time frames when you are taking these trades. All right, and if you look at that previous 5-minute candle, look, we got another doji. That is a candle with 2 long wicks and a small body. So this is why we are getting a reversal right here. So again, remember, my standard deviation says this red shaded area is usually where we get the reversal. So everything is pretty much lining up to what we're expecting. And that's kind of how you want to think when you are taking these trades. Based on what price action is doing, they say it's not good to have expectations, but once you understand what you're looking at, you're going to have expectations. You're going to say, okay, I've seen this price action before. I've seen these things happen before. So yes, at this time I was expecting it to reverse. Now, again, since we have that 5-minute gap, that's where I'm expecting it to reverse to. And this is all what price action is, right? Looking at what previously happened and having an idea of what's going to happen next so you can capitalize and make sound decisions in your trading, guys. This is what it's all about. So as you can see, that 5-minute candle is pushing bullish right there. We got buyers coming in, buyers stepping in. So now that 5-minute candle closed above the bodies of those previous red indecision candles. So this is giving me, again, more indication that we're probably going to get a bounce here. So this is where I moved to the 1-minute, and on the 1-minute time frame, as you can see here, we started making this push up, guys. So I just want to let y'all know that my last contract did end up getting stopped in profit. But before that, I want to let you guys know that, again, we are working on these Apex evals. We started the weekend drawdown. Now we got both of these accounts out of drawdown. One of them is about $600 from passing. The other one is about $1,100. So we are moving along. We're making a lot of good progress this week. We're getting a lot of good education. And again, if you guys stuck around to the end of this video, I appreciate all the love. If you like the video, please like the video. If you like what I'm saying, if you love the education, please subscribe. We're going to have more information come down, more educational videos. Maybe even by the end of the week, we might have a psychology overview, and maybe even do a whole weekly recap, guys. And yeah, so as you can see, look at this 1-minute candle. So you see how it attracted back to this gap, and boom, right there, it took my last contract out in profit. And you can see price made that reversal from that red standard deviation level. So I'll actually do a video on that, but that's for another time. I appreciate all the love, guys. See you in the next one. Peace.